All right, everyone, welcome back for another episode of Carnivore Trade. Today is Tuesday, September 27, 2022. Got done so already, give it a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, today, so spiders here at about 3:30 p.m., well, closer to 3:40 p.m., so markets close in just over 20 minutes. We're sitting down about 0.5% here. Q's outperforming again, so same kind of story as yesterday, down just 25 basis points as opposed to the 50 that the spiders are down and Dow is down 70. Russell is actually flat today, so a little bit different. Russell's actually flat to positive, so Russell and NASDAQ starting to show a little bit of leadership here, which is a little bit of a positive in the near term. Again, today's price action is really kind of a repeat of yesterday, all things considered. So we kind of had that little move up in the morning yesterday. Today we gapped up, went into double top there, and the NASDAQ actually exceeded double top a little bit. As you can see, the NASDAQ's been outperforming, and then we just kind of had this little rollover here, and then we had a failed bear flag in the afternoon, and now we're kind of just hanging back out in this range here. We did pierce double bottom on the spiders, so we did pierce that, and it's looking like we're closing basically near the lows of the year so far today. On the ES, you can see there did not pierce double bottom. It got very close. Low of the year on the ES was 36.39. Today we got down all the way to 36. Oh no, we did pierce it. Okay, so that I take that back. We did pierce it by a couple of points. Let me check the SPX. Yeah, the SPX did as well. So either way, they're all into double bottom essentially. Big picture though is it still feels really kind of forced down here. It looks like sellers are getting tired to me, and I think that risk is kind of getting to the upside here. It doesn't mean we can't pierce a little bit lower tomorrow and kind of test the lows again, maybe 3,600 on the SPX, maybe sub 360 on the SPY. I definitely wouldn't rule that out, but I think that at this point, there's just the short trade is very crowded here, and the market is very oversold, and it hasn't had any sort of snapback rally. And I think there's a lot of late bears that kind of need to be punished for shorting the whole. That's just kind of my opinion here. Currently, I'm flat, essentially, outside of the core short position that I've had for a little while now. So I have no real bias here, but my thought process, my kind of analysis says that we should get a bounce. And again, really, it has not changed much from yesterday. I mean, we did a whole lot of price action today, a whole lot of whipsaw, really to kind of end the day so far relatively unchanged. And who knows, maybe we dump out in the last 20 minutes. It's certainly possible. The market is starting to slip here. Pretty much everything I can see on my screens is getting a little bit of a dip here in the final half hour, and you can see the spiders there starting to dip down. But overall, it hasn't really been anything new from yesterday. So we're basically just kind of hovering at the lows, which is what we did yesterday. It's really what we did Friday, although we did punch off the lows a little bit on Friday. But again, it just feels a little bit too one-sided down here, and I think that if the bears are going to break this, we're going to need a rally and then a lower high at the very least. And once we get that, then I think this level is vulnerable, and I think we can go much lower very quickly here. So that's kind of the analysis moving forward. But for right now, we got to respect the downside. Bears are in complete control, and until that changes, until we start getting some hourly kind of if we start taking out these hourly pivots, even really just this hourly 20 moving average at this point, that's been resistance there on the spiders lately. And if you can get above that, that would be kind of step one that maybe we're going to move up here. But overall, I do expect us to at least get some type of relief bounce by the end of the week, maybe as soon as tomorrow or Thursday. So that's really what we're looking for here. And again, nothing has really changed from yesterday at all, just kind of sitting tight in that position here. As far as sectors and markets, triple Qs here again, just kind of hovering at that gap fill. So the Qs have not challenged the lows of the year, and neither has the NQ. So which makes sense there, as it's basically the same thing there. And then the composite as well, also putting in higher lows. I know I don't look at the composite that much, but you see the NASDAQ 100 and the composite also not putting in the new lows, where the spiders and Dow is, and the Russell has not put in new lows yet either. But you look at the Dow here, that has, that took out the lows last week. So a little bit of weakness here outside of the NASDAQ and small caps, which again is a short-term kind of bullish little positive. So again, we still need to respect the downside. By the way, speaking of downside, if you take this, just do a measured move on the Dow here at 35.5 and, to 29.7, you round it up, it's about 600 points. And then subtract 600, you can see we're headed down to about 28,000 there on the Dow. That would be your essential measured move there. So right in that area, that would also fill that gap. That was the Pfizer gap, by the way, on the Dow. So that would be kind of your price target there. I bet there's a fib there as well. Let's take a look. Yep, so, well, there's 50% fib, just a little bit below that, so about 400 points below that, but you could easily get there on overshoot. So just a little interesting little tidbit I wanted to share with you guys. I know we don't look at the Dow all that often, but when I see those kinds of things, it definitely catches my eye here. Anyways, let's flip over to semis. SMH, again, it's holding double bottom, just like yesterday and Friday. Nothing news happened. Again, I will notice, though, you'll notice that we're up 50 basis points. And the spider is down 50 basis points. So I like to see the semis lead. You guys know that. That's a good sign in the near term. Again, it's just one day. Let's not get too excited, but it does kind of support the thesis that we're oversold. And we need to I think the late bears need to get punished here. So that's really all it is. But semis hanging in there, showing some leadership. IGV also hanging in there, showing leadership as well, up 40 basis points in a down market. It is, it has pierced the year-to-date lows. Obviously, we've made note of that over the last couple of days. It's weak, and the weekly pattern is, this is a great bear base here, but at least for today, it's signaling a little bit of relative strength here, as are the Dow transports, another leading indicator. So up 1% on the day are the transports in a market that is negative. So again, semis, Dow transports up. Generally, that's a positive sign, at least for the short term. And Russell and NASDAQ outperforming. Again, these are just little things and pay attention to that can give you clues as to where the market wants to go in the near term. As far as interest rates, another positive. It's not a big one, but we finally had an update on the 2-year Treasury. Not up much, it wasn't up much, but it is green. So maybe a little bit of relief coming. If we flip over to the curves here, you can see 10s and 30s here. Got a nice little relief bid today. This is that's the 10-year yield. Let's get over there. 5 and 30 also got a relief bid there. 3-month 10-year continuing to retrace a little bit. So maybe something a little bit going on here, because the 3-month and 10-year is starting to gain some ground back. And I think I said yesterday we'd be looking for a move right up into this 75 basis point area. That would be your logical resistance area. So we'll be watching that. And then obviously 2s and 10s with the 2-year up on the day. Take a look at the volatility in this, by the way. 2 days ago we were at 50 bips, and today it's just about 30 inversion. That's amazing bond market volatility, guys. And that's not a bullish thing, but short term, the fact that the curve is tightening a little bit is a small positive for the market, at least right now. But anyways, yeah, so 2-year getting a little bit of a bid, 10-year still bidding up higher, 30-year soaring today, but the yield curves did come in, which is a small positive here. So, but man, look at that 30-year there, huge move, now above 3.8. Let's take a look at the monthly here. Yeah, wow. So this looks like it wants to get to 4% there. Pretty amazing move. 10-year here, almost up to 4%. Yeah. So parabolic move here in yields. Yeah, what can you say? And we knew this was coming, but yeah, pretty amazing move. Anyways, home builders. XHB, again, hanging on to this 54 handle. I said that would be support. We tested it yesterday, tested again today, and home builders are up 18 cents on the XHB. So kind of hanging in there. Nothing too significant going on, just kind of hanging in there. ITB, same kind of deal. Little pivot low, we tested that. It kind of coincides with this area right here. It's hanging in there for right now. We'll give it the benefit of the doubt. It's basically flat to negative. But again, this will move up if the market does squeeze as well. So VNQ, this one's the dog of the market right now, down 1.3% on the day. And yesterday I said I had a target of around 79, but you had a good chance to put in a low yesterday. This is taking out that low today. It's now basically close enough to the target here. 102.50, we'll call it 102. to 91. You know, that's 11 points. And then you take your head and shoulder break there. You know, 91 minus 11, that's 81. So actually, I guess it did. I guess it did exceed the target yesterday. But either way, right into pretty good level right here. You filled a gap, I believe, today. Let's see, 79.90, almost filled that gap today. So we'll see if tomorrow, actually, yeah, it did fill today. 79.82 is the low. So we filled that major gap there today. That was also the Pfizer gap. So just to visualize, when we looked at the Dow a minute ago, this is where the VNQ is already. So there's the Dow, there's the Pfizer gap there, and VNQ. So this has erased all of the gains from the Pfizer gap. That's pretty remarkable here. Amazing move there, but VNQ continues to be weak, and it's basically it's basically satisfied that head and shoulders target, all things considered. Anyways, financials here, XLF again testing double bottom, making a new low. Let's see. We got 30.37 is a low. We're basically right there right now. So we'll see if we can get a close below that. If it closes below that, then that opens the door for a confirmation move tomorrow. I don't think that happens. I do think you're just too oversold going into this. Again, I think you need to bounce up, put in a lower high, and then you can get through that. But XLF taking a little bit of a hit here and showing some relative weakness finally, as we noted yesterday. But I do think that double bottom holds, at least for now. XBD broker dealers, again, you're into kind of this little support area, this little chop. Should get a little bit of a bounce here, but again, ultimately wants to go back to that 400 handle. But nice little fall there for broker dealers. Energy here, crude getting a little bit of a bounce, up 2.5% on the day as far as WTI futures. Again, still looking for one more little push down here. I think that we probably get that. I was hoping we'd get there today, but sometimes the market doesn't always give you what you want. You gotta play the market you have, not the market you want. But in any case, a little bounce today. I wouldn't make too much out of it. It's not like it's an engulfing reversal. It's not like it's a power reversal. So we'll see. There's still a chance we could push down there tomorrow, especially if that dollar rebounds, which we'll talk about in a second. XLE here, also getting a little bit of a bounce, as you'd expect with crude up. So a nice move there. This is outperforming, although it's outperforming today, but over the last 3 days, this has gotten really smacked down hard. There's still a lot of support here at this the 65, 65.50 area on XLE. Same thing with XOP, right in this range around 108, 109. And then the OIH, there's still good support right in this level, just sub 200. The only concern I have is it came down here with a lot of velocity. Like that's a power gap for sure. So OIH is definitely the weak one in the sector. Nat gas here, just kind of retracing yesterday's bounce. Again, to reiterate, I am not a buyer at this yellow trend line at 630 anymore. I don't like that one-day bounce you got. It's too much of a bounce for me. So it doesn't mean it can't hold if it goes down in there and tests it. It just means that statistically, odds are lesser in your favor. So I don't like it at this point. I would have preferred to get down there on a straight shot. But overall, nat gas kind of reversing a little bit of yesterday's moves. We'll see what kind of pattern it puts in from here. Dollar index. So strangely enough, it's still green, but it still pulled back off the highs, and that did give commodities a little bit of a lift today. To a degree, oil is up. You can see gold, GLD is still faded off the highs, but it is still green. So commodities getting a little bit more of a pause at the very least, or some relief. But again, kind of just hugging this trend line. Again, I said that 114 would be kind of a stall out area. We'll see if we get a pullback or something like that. Maybe to 112. You'd have a pivot high right here at 110.75. So somewhere in that area, 112, 111.75. That would be your pullback kind of range. And then you have the 20 moving average upsloping as well. And then after that, there's that 50 moving average, and which coincides with this trend line as well. That has been a powerhouse trend line. But overall, this is starting to become a broadening pattern here, so we have to be careful with that. But there's nothing to say it can't coil up further and go up, go up to 120 on some type of a panic blow-off move. But I do have 114-ish penciled in for at least a stall out or a roadblock kind of level. For gold, so yeah, getting a little bit of a relief bid here, an inverted hammer so far on the daily. Again, no real updates here. Trend is down. I do think we get a panic flush soon, and I think it's going to provide us with a massive buying opportunity moving forward. But got to be patient with that one and kind of let it get there. Let the market get us to it, and when we get there, we'll be ready. Silver Also kind of a weak day. You know, we rallied up yesterday, and again, I said yesterday, I don't like that inside bar failure. It's just never a good sign. So I do expect a little bit, you know, do expect us to test lower prices here in silver. And, you know, we did fade off the highs. We rejected that inside bar low on the back test today. If we look at the intraday, let's see on the 10-minute, we came back up here, tried to test it. So now that support is now resistance, and silver is backing off. So we'll see what kind of a pattern we get there. If we take out the lows, I already have levels worked out on that for a buy level there as well. Platinum, same kind of inverted hammer look. Again, we'll just wait on pattern for this one. Nothing really too new to say from yesterday. And copper getting a little bit of a bounce. That's not copper, that's palladium. Little bit of a bounce here on palladium though, and then copper also kind of a flat day. Again, we want to see this 330 level, 331 level, we'll call it, on the weekly hold on a closing basis. So copper is in trouble if it closes below that on the weekly, and it will be vulnerable to a move lower. All right, for Bitcoin here, not much to really go off of. Again, kind of a quiet day, although it did try to break out a little bit. So we had that inside bar. We talked about that kind of micro inside bar yesterday. We pushed up and kind of rejected. We got in between that 20 and 50 MA, and you could almost make a case we back tested this trend line again and then backed off of it. You also went up into this red bar right here. So good amount of resistance there. And this little micro inside bar wasn't really going to be good enough for much of a move anyway. But pretty good rejection there for Bitcoin. Same thing there on Ether, although Ether is holding up a little bit better. This white trend line is really the level we're watching on Ether. If you get a close above that, that will negate the head and shoulders, and that would be bullish crypto in the near term. All right, so let's flip back over here. Let's take one last look at the spiders. Markets close in about 6-7 minutes here, so we're getting a little bit of a pop here. So kind of just hanging in there. We did have a little bullish inside bar, and we back tested that. Okay, so this is interesting. So this was the low here. So that white line, this is that white line right there. What do you guys see? We broke below it, put in a bear flag, it failed. Then we put in a bullish inside bar, and where did we stop? Right at 362.17, and now we're getting a bit off that. So support, you know, broke, was resistance, now it's becoming support again. So maybe a little bit of a positive here going into tomorrow. Again, doesn't guarantee anything. Trend is still down. Bears still have control until really we get above 370. But could be the start of something. So we'll be watching that into tomorrow. And again, just to kind of reiterate, I do think we have some type of a counter trend move here. I just think there's too many shorts in the market in the near term, and the chasers need to get punished, essentially, is what kind of I'm expecting here over the next couple of days. Anyways, guys, gonna wrap it up here. You guys take care. Come find me on carnivoretrades.com. I'll talk to you all tomorrow.